Hello, welcome to day 1 class for the second week GST course. The main objective of today's class is to enlighten the students by giving a bird eye view on indirect taxation reform in India since independence. Second one is to evaluate recommendation of various indirect taxation reform committees and the need for introduction of GST in India. We will discuss now indirect tax reform in India is reform in excise duty, customs duty, service tax, state taxes and reform committees. Let us see the reforms in excise duty. From ancient period, excise duty has been identified as a major source of revenue. The Mauryas rule imposed excise duty on liquor and salt. The Mughals and the British were treated salt as single monopolized goods for rising revenue. The Mughal rule was imposed excise duty on sugar, cloth, leather and dairy products. This had identified in the early British rule. However, in 1984 modern excise system was recognized when the duty was imposed on cotton yarn for counts above 20 at 5%. Thereafter, the base of excise duty was widened. In 1917, motor spirit and kerosene in 1922 were included in excise. In 1944, duties were levied on coffee, tea and betel nuts. In pre-independence period, revenue flowed from customs duties and excise duties in smaller proportion. After independence, excise duty was collected on a systematic basis on specified commodities. Revenues from excise duties increased considerably in the 1950s and 1960s, and sharply thereafter the list of commodities subject to tax was increased in the initial years because of administrative convenience on the commodities included in the tax or raw materials and intermediate materials rather than finished goods to raise revenue, and then final consumer goods were included. There are different acts which are levied excise duties in India or consolidated into a single comprehensive act, that is the Central Excise and Salt Act 1944, well known by Central Excise Act 1944. To govern the Excise Act, separate rules are framed with a separate act, that is Central Excise Rules 1944. The growth of the excise tax base through the inclusion of commodities after the independence, it is indicated that the commodities which are not basic to the people means luxury such items must be, but it was realized that not only the luxury items will raise the revenue to the government, there is also necessary to impose duty on the items which are produced in mass need brought under the purview of excise. To make changes in the indirect taxation structure, that government had appointed an indirect taxation enquiry commission in the year of 1953 under the chairmanship of Dr. John Mathai with the following objectives. Number 1, to examine the incidence of central, state and local taxation on the various group of people and in different states. Objective number 2, to examine the suitability of the present taxation system for the development programs in the country and for the resources required for it and for reducing inequalities of income and wealth. Objective number 3, to examine the effects of the structure and level of taxation of income on capital formation and maintenance and development of productive enterprise. Objective 4, to examine the use of taxation as a fiscal instrument in dealing with inflationary or deflationary situations. Number 5, to consider other relevant matters and to make recommendation with regard to modifications required in the present tax structure and on fresh avenues of taxation, and suggest that for the economy it will be necessary to extend excise and sales tax to the consumption of lower income groups and of goods, that is 16 which are commonly classified as necessaries. This was turning point which increases in the scope of excise duty. By 1947, about 14 commodities were included under excise. The independence gave a new boost to the Indian industry and the production was increased in the unexpected production. This minimized the dependency on the imported products. This was resulting in decline in the customs revenue to the government. Then there was a necessary to compensating the loss of customs revenue that emphasized on a corresponding increase on the excise duty side. Immediately after the independence, duty on salt was removed and it fulfilled the loss sustained in the revenue due to the abolishment of duty on salt, and to support the handloom industry, excise duty on mill cloth was introduced in the year 1949. After this, government had realized that the residuary imposition itself attractive enough to raise additional source of revenues. The rate of excise duty was fixed based on the following factors, namely manufacturing process of the commodity, consumption of power, nature of raw material consumed, the utility of the finished. These complexities in rates based on various factors created an interpretation dispute and litigations filed in the court of law based on divergent opinions of the people. Additionally, other disputes raised due to complex issues such as definition of manufacture and manufacturer, the meaning of the value to levy excise duty on ad valorem basis, scope of various exemption notification given under excise provisions. This resulted difficult in implementation of excise rules, and also excise duty structure becomes further complicated from year to year. Then the excise duty become a manufacture sales tax administered on the basis of goods cleared from the place of production, that is warehouse. Cascading from the tax resulted not merely from its pre-retail nature, but also because it was levied not only on final consumer goods but also on inputs and capital goods. The larger number of exemption was allowed, and to some commodities at concessional rates are allowed to mitigate the disputes. Due to this situation, in the 3 decades before 1991, various expert committees on these issues and academicians are worked to stress the need for reforming the existing indirect tax structure, particularly on excise and custom duty matters. This resulted in uncoordinated growth of various indirect taxes levied separately by the center, state governments and also local authorities. To tackle with these issues, Indirect Tax Inquiry Committee has set up and its report issued in 1977, which emphasized on the allocation and distributional issues in relation to union excise duties. Its recommendations were not implemented immediately and waited for almost a decade. The recommendation of the Tax Enquiry Committee includes these are all. Number 1, conversion of specific duties into ad valorem duties. Second one, to bring the unified rate of duties and to initiate an input tax credit mechanism to convert the cascading manufacturer's sales tax, that is excise duty, into a manufacturing stage value added tax, also known as MANVAT. But the main issue was the lack of preparation of the government to introduce MODVAT as per the recommendation of the committee, and it evidence that a process which is based on learning by doing concept. By the year 1996 and 1997, majority of commodities were covered by the excise tariff and the comprehensive credit system. So it was the complicated VAT structure with operational difficulty and incomplete coverage. This was only in India, throughout the world. And also it was affected by the decline in the percentage contribution from the tax revenue to the GDP rate due to the introduction of modified value added tax. Along with these additional reforms in the excise duty structure came with the implementation of the recommendation of the Indirect Tax Reform Committee. The Reform Committee includes various issues, that is unifying the rates of duty and setting up of account based administration. The summary of the second week day 1 is, I hope the first class of the second week have good insight on the various reform measures which took place in indirect taxation, and also analyze the drawbacks of the earlier complex taxes and the need for forming various committees for offering the recommendation to have the flexible, well structured indirect tax system. And also majority this class discussed on the important reform measures of excise duty. Thank you.